It's too darn hot. And unlike Cole Porter, we have a Fed chief who doesn't like it hot. He's trying to chill things down to get it so, baby, it's cold outside. And that's what Jay Powell did today when he raised interest rates by 50 basis points and said there could be many more hikes to come, noting that rates are going to have to stay high for a while. So then why did the market more or less hang in there? Why didn't we plummet on the news? Instead of the Dow finishing off just 142 points, S&P slipping 0.61%, NASDAQ, of course, losing 0.76%. NASDAQ, so pathetic. Simple, because most money managers in this country saw it coming. They know Jay Powell's right. They know we still don't have inflation under control. They've been to the supermarket. They've braced themselves for more pain. They know what the bonus situation looks like. Yes, we've seen some declines in raw commodities, including oil. Yes, we had the beginning of a peak in some of the consumer price index components yesterday, used cars, gasoline. But we don't have much else under control, and let's face it, we've had nearly 2 years of elevated price increases, so Powell's not going to stop until he rolls a lot of that back. Above all else, even after a year of massive rate hikes, the Fed's made almost no progress on the most important kind of inflation, which is wage inflation, and it's a real problem, the most important of problems. Because that's what they care about the most. Wage inflation. We keep acting, oh, maybe like they'll be happy because gasoline at the pump is this or rents or that. No, that wage inflation is the issue. It's not that he wants people to make less money. It's that wage inflation is systemic, it's endemic, and it fuels inflation in all categories. As Powell said today, there are roughly 4 million more jobs than there are workers in this country, and until there's less of a mismatch, he can't stop tightening. He just can't. Now, there's always a cohort of people who are just completely dead wrong about these things. They expect Powell to say something somehow contrary to what he's been talking about, something about how prices have come down, so why not just ease up?
House of pleasure.
Those are the ones who panicked and blew out of stocks immediately, sending the market down big, initially betting that others would follow in their footsteps, even though the Fed couldn't have telegraphed this move any more clearly, could it? They were making a bet. They were making a bet that other traders would see the decline and then freak out. I know where they're coming from because I've done that myself. I read a statement, I thought it was too hawkish, listened to the Fed chief, I thought it was too tough, and was glad to exit the building. Who needs that kind of risk? But that kind of panic only makes sense when the Fed takes us by surprise. Still, I have no doubt there will be more people bolting from stocks tomorrow morning, believing they've been given a tremendous opportunity to get out well ahead of when things accelerate to the downside. I think they're being too frantic. They need to understand the dilemma that Powell finds himself in.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.